This is Eric Muathe with Muathe.com with a quick educational video. In this video, I want to discuss how anybody and everybody can use the moving averages, and here I'm talking about the crossover between two moving averages. It's a simple strategy that can really capture momentum. So of course I'm talking about the crossover between moving averages. So what we're going to do here in this quick educational video, links for more are going to be in the description of the video, but let's take a look at an example where we can use the 200-day and the 50-day moving averages. And what we're going to do is we're going to find periods where we have a flat moving average. More of the time it's going to be the 200-day moving average. So the 200-day moving average, let's say, is flat like this for a period. So it's flat, and we have, let's say, let me change colors here. Let's say we have the 50-day moving average starting to coil high. So we are anticipating in the future a crossover, and it's this crossover we want to capture, and I'll explain why in a second if you are new to this. So we are anticipating this crossover period here. Now to understand this is you have to appreciate the fact that if you have a moving average that was sloping lower for a period of time and then goes flat for a while, then it means that the only way the moving average can really move higher is by prices expanding rapidly to the upside. So price would really have to accelerate, hence the swing trade opportunity. And I'll show an example here briefly. So again, what we're doing is taking advantage of a flat moving average and a future potential crossover, and this crossover can actually generate a lot of energy which can move an instrument high. Now it works in reverse, but let's not discuss that in this video. Links are going to be in the description for more. Now I should stress what we do here is we come and find the highest daily close or weekly close depending on what time frame. So it works on all time frames. Find the highest daily close, and as prices play around, let's say prices are in this area, once there is a breakout above this, what we are calling a daily close or a weekly close or an hourly close depending on your time frame, it is that breakout that we are anticipating to use as our entry. So wait for the breakout, and the theory here is that this highest close while the moving average was flat is a trigger that there is a possibility that prices want to expand, and hence that is what creates the opportunity to capture a potential move to the upside with a strong swing trade move. Let me show you an example. Now remember, links are going to be in the description explaining this method, and this is the method that I have researched. It's my own method. I call the Muathe Virgin Breakout, and again, links are going to be in the description. So here we have an example of the 200-day moving average, which is the green line, which was sloping lower, and then here it's starting to go flat, and we have an upward coiling 50-day moving average. So we are anticipating that in the future there might be a crossover between the 50-day and the 200-day moving average. So we are anticipating a future crossover, and we want to capture any upside momentum while this is forming. Hope that makes sense, because there's only one way to change the direction of the 200-day moving average. Remember, the 200-day moving average was flat for a period, was going lower for a period, in fact was going lower, and now it's starting to flatten out. The only way prices can influence the 200-day moving average to go higher is by a rapid price expansion. So in this example, we can take this daily close and use any breakout above that level as an entry. So this is as of June 2nd. So where we're going to go, let's go to the next day, and we can see that by June 3rd there was a breakout here. Now this breakout is what I'm talking about. It's the breakout above the highest daily close, because it's a daily chart. Highest daily close while the moving average was going flat. And I should point out, this is not the best flat moving average, but you can tell it was flattening out. Generally you're gonna see, or you'll tend to see, better flat moving averages, but this one will work for now. So there's a breakout. So as of this day, this was a buying opportunity, right, as of June 3rd. And what I'm going to do now is show you the current price action as of June 29th. So this is the breakout we were talking about, and you can see the stock broke out from under 2, and within a couple of days, 3 days or 4 days later, had gone as high as 9. So from under 3 to 9 in about 3 to 4 days. And now we can see that this actually is a flat moving average. As it was forming, it looked a little bit shaky, but keep in mind, now we have the crossover that we were anticipating. So this method, which I call the Muathe Virgin Breakout, captures this price expansion by anticipating a flat moving average changing direction, and by anticipating a future crossover. And this can apply in any market that you are trading, be it stocks, forex, cryptos. This is valid. This is Eric Muathe, Muathe.com. Love and light, light and love. Namaste.